Good afternoon, ladies and gents from Singapore and around the world. Welcome once again to DealStreetAsia's PEVC Summit 2021. Today, I have two distinguished guests with me to discuss a very exciting topic that's been hogging the headlines recently, and that is SPACs. We have Ravi Thakran, Managing Partner of Turmeric Capital, and Chairman and CEO of Aspirational Consumer Lifestyle Corp, of which you have two blank check vehicles, the first of which inked a merger with Wheels Up just earlier this year. And the second is a $300 million SPAC vehicle. We also have Dr. Finian Tan, founder and chairman of Vickers Venture Partners. His team raised a $120 million SPAC earlier this year called Vickers Vantage. Welcome to the two of you. So the title of today's panel is called SPAC Side Story: Behind the Euphoria and Frenzy. Is the SPAC a viable exit for investors? So my first question is for the both of you. Finian, maybe you can take this first. SPAC euphoria, has mostly waned. I think you can say that in recent months in the US. Do you still believe this is a viable exit for investors, and why?
Yes, well, thank you very much for having me. Yes, the bubble has burst. And generally bursting of bubbles is a good thing because bubbles are not good. And in the past, the euphoria was a little bit too frenzied. It wasn't sustainable. So I'm actually glad that the bubble has burst. We raised 138 million in Vickers Vantage, and we're now up looking for our target. And we're very pleased with the progress so far. I think SPACs have a role to play, and the role is an alternative to an IPO. And as long as it fulfills that role, it will continue to be there. It doesn't mean that you need to have hundreds of SPACs raising hundreds of billions of dollars. It can be sustained with a much lower amount, but it's good to have alternatives to IPO. Why? What do they actually do? SPACs are good because, for one, it allows retail investors to participate in something like an IPO. So let me give you an example. Let's say a hot new company is going to list in an initial public offering. The chances of a retail investor participating in that and being invited to participate is very, very slim. Who are the people who get invited in those? It would be the cornerstone investors, the big institutional investors like Fidelity, like BlackRock, and people like that, right? If you are, a doctor, a lawyer, or a retail investor, the chances of you being invited to participate in such an IPO is very, very slim. And even if there is a retail offering, you probably have to ballot. And how would you know whether that's a good company or not? Because for the institutional investors, there was a very good presentation by the company. They actually went to see you, they explain everything. So you get an idea, and you have the team and you have the expertise to analyze the company. But if you were a retail investor, you wouldn't have a chance to. SPAC allows retail investors to participate. For example, if you have, say, a sponsor of a SPAC who builds a track record, and they have 5 or 6 SPACs, and they bring in very great companies, and a lot of their companies perform, you might decide to back him. And in so doing, you will participate in the D-SPAC, which is almost an IPO. So you put your trust in the sponsor. But you have the ability to redeem your money if you actually don't like the deal. So it's almost like participating as a cornerstone investor, but when the deal actually comes to your table, you can say no. And you can get educated about the space. And so it's a great way to level up retail investors. So I see a flight to quality for SPAC sponsors, towards SPAC sponsors that have built a track record for themselves, and allows the ability for retail investors to join in, and for smaller institutions to come in, because it's normally the big institutions that get invited. into IPOs.
Mm.
And then there's the added advantage to the company of a shorter time to listing, cheaper cost to listing, and the ability to negotiate with one party rather than 50. Because when you want to do an IPO, you have to see 50 different investors. But in a SPAC deal, you see one, you negotiate with them, they do all the due diligence. So that's another advantage. And thirdly, there is this ability to make financial projections in a merger, which is a little bit more difficult for an IPO. But that's a regulatory arbitrage that I think will eventually be closed. But for now, it still exists.
Mm. But given the oversupply in the market, how challenging has it been for you to be able to secure a target company? Your SPAC has been around for the last half year, I would say. Maybe Finian can go first and then to Ravi.
When you say oversupply, that's a relative term, right? Mm-hmm. What makes you say that it's oversupply? I think you should separate investors' appetite for SPACs and SPACs' ability to find targets when you say oversupply. I think as far as investors' appetite for SPACs, there was an oversupply and there is now less SPACs going public because less investors wanting to invest in SPACs. There is less PIPE money. Why? Because some of the PIPE people have got their money tied up in SPACs and some of them got their fingers burned. So less people are keen to participate in PIPEs. But the number of targets are like unlimited. It's like there are millions of companies that would love to go public. So I don't think there is any problem for SPACs looking for companies. What they may have problem is finding the pipe to follow. There are still now 400 over SPACs trying to find targets, but there are thousands of targets. So I don't think there's a problem finding companies. You might have difficulty finding pipes unless the companies are sexy and in a hot space. So there is a flight towards companies that will attract pipe money better.
Okay, maybe to you, Ravi. I mean, do you agree with that? Or because the sentiment I get from the ground is that yes, there are SPACs, there are plenty of SPACs around, but a lot of the SPACs are chasing the same targets, because while you may say that there are a lot of companies to target, the number of good quality targets are still few.
Look, let me first of all zoom out once again and double click on many of the points that my friend Finian has put forward. One, I would say whenever the market gets overheated and bubble gets created, it's good that gets corrected and there's a flight to quality. 100% agree with Finian on that. And I see that happening already in the market all across. The second part of it, I double click on what Finian has been saying, is that today there is no dearth of good quality assets. Let's take this way. There are at least 10,000 companies out there who should be public tomorrow, but there are only a few hundred SPACs, let's say 400 to 500 kind of SPACs in the market. So there is still a disproportionately larger number of assets who could go public and should go public. And then SPAC is a fantastic route for that. I think the displacement in the market has come because of various factors. SEC coming in with a regulatory headwind on this, and still the jury is still out. It's not been fully settled which way SEC is going to rule on this one. And therefore, market went into a stalemate. Secondly, a very large amount of capital is stuck in the pipes. So therefore, the new pipe capital is very much in short supply. So I would say in all these points, I fully agree with Finian. And at the same time, also agree on the point that it's all about the quality of the sponsors. The quality sponsors will be able to get quality assets. I'm very sure about it. Despite this kind of dislocation in the market today, I generally believe the marriage between a quality sponsor and a quality asset will happen. And you will start to see that happening. However, I must say in short term, there is this backlog that has got built up. Till such time the pipe market doesn't clear up, particularly in US market, there is certainly headwind. So I already, for example, I was in New York last week, and I see people restructuring their SPACs. Either they are putting much more money in the trust fund so that the hedge funds who are pitching in today, they can expect at least some minimal return. On the other hand, people are restructuring their promote, et cetera, et cetera. But I would say the better quality sponsors do not need to do that. They rather should wait for this whole thing to get over with and still look for quality assets. And I think that marriage will happen. In the meanwhile, what has happened is market like Amsterdam, market like Singapore, market like Hong Kong have woken up to the opportunity. And I really genuinely welcome that. And so are all of the industry colleagues. And we are very excited about the Singapore opportunity in particular. Really look, SPACs are here to stay. As compared to what SPACs were 20 years ago to today, the biggest difference is the quality of sponsors involved in it. I don't think 20 years ago, there were people like Finian and then my organization and others who are in play, like Gores and Social Capital, etc., were involved 20 years ago. 20 years ago, it had a bad reputation of being a backdoor listing. Today, quality of sponsor has changed everything about this. But I believe in maybe a quarter or so, by early next year, even the market in New York will open up. In the meanwhile, the opportunity in Amsterdam and Singapore is very much for taking. And there are enormous number of companies in Europe and Asia who would like to pick up that opportunity.
In your conversations with some of these target companies that you talk to, do you find that the founders are kind of having the upper hand in some of these negotiations because of the fact that they know that there's so many SPACs out there chasing after the same few quality targets, and so they are kind of pushing harder in some of these kind of negotiations? And what kind of terms are they asking for?
Actually, look, I think this is very interesting you say that. In general, perhaps you may make such kind of assumption, but I can tell you, this is where the flight to quality, exactly the word you can use, is very imperative. And I would like to underline that. Flight to quality from both ends. So why would somebody want to go for a SPAC sponsor like Finian's company and our company? Is that if they would want the qualities that we can bring to table, the faculties we can bring to table are meaningful to them, then it makes sense. If the only thing they're looking at just a path to get to public market, then it's not the right thing. So for example, in our case, we've always said there are two major faculties we bring to table. One, my team, all of us have been in building brands. We take a journey from a good product to a brand, or a good brand to a great brand journey. So that's one faculty we bring. The second, if you haven't unlocked Asian market, we can help you, the American brand or European brand, to build a bridge to Asian market. So if that is the need, then we are the right partner. If that's not your need, maybe you don't need us. And then we don't want to be working. So I don't think the motivation should be just wherever there's a simple financial motivation. Those people who thought this is a great bandwagon to make superlative returns and let's get on it, I think those guys are certainly going to face this hard reality that you defined. But I think the quality sponsors would not have any issue. That's what I firmly believe.
Are you able to share any concrete examples, as you mentioned, of interesting restructurings of SPACs that you've seen in the recent months? You did kind of briefly touch on it, but I don't know if you can provide any distinct examples, like the promote you mentioned being a factor. They're tweaking some of that. How are some of these new SPAC models looking like these days?
Look, if you see in the last month and a half or 2 months of SPACs that have come to the market in New York in particular, all of that have come with some kind of restructuring. So either people are putting much more money into trust fund, or the warrant ratio has gone from 1/3 to 1:2, or some cases the promote has been compromised. But I really believe that quality sponsors do not have to get into that game. Quality sponsors should stay on, be steadfast about what they're looking at. And there are great quality companies who would want great quality sponsors. So again, if you are wanting to get in the market just because somebody can get you faster, better valuation and all, that's a different game. You have to be in the game wherein you're looking for a particular sponsor because they can bring you much more than just a path to public markets. And I think that's a clear part. Now, Finian's firm has its own set of faculty, which makes them very exclusive. We have some faculties of our own. And I think, therefore, players like us don't have to be in a hurry to run and do this second DSPAC. I think right firms, and I genuinely believe, and I agree with that there are tens of thousands of companies, if not much larger, who should go public, and right sponsor marriage is the way to go.
Next question from Finian. I mean, how has deal flow been like for Vickers Vantage? I mean, so far you've had one SPAC that's been out in the market. What kind of timeline are you setting for yourself to secure that target company and hit DSPAC? And do you still have plans to launch more SPAC vehicles in the US market?
Yeah, we have an 18-month runway. 9 months have passed, so we still have another 9 months, and we are progressing exactly as we expected. So no issues. I think we are very excited. The SPAC is a listed vehicle, so I can't say anything more than that. But I would like to echo what Ravi just said. When you say that companies have a lot of choice, and you think that's because of the fact that they have to negotiate some of their promote and reduce it. I think the two are separate things. The negotiating of the promote, etc., are SPAC sponsors negotiating to give more to the investors, or are they giving part of their promote to the target? If they are giving the promote away to investors, that means that they are trying to entice the listing of their SPAC. If they are giving away the promote to the company, the target, that means that it's a sign that there are too many SPACs chasing that particular deal, right? Now, the promote is not very large. So if the company wants to squeeze the promote, then they're only interested in money, right? They're not interested in other things. In a time like this, where the merger is in question, what's the point of squeezing a little bit more promote and not have a successful DSPAC? Then you're losing the wood from the trees, right? There's no point in getting a bigger piece of no pie.
Yeah.
So I think what's most important is not trying to squeeze the promote, but choose the SPAC that gives you the best chance of successful DSPAC. And that should be the driver. And if that's the driver, your choice would be the best sponsor that's acceptable to you and acceptable to the market. The best chance of raising a pipe. And sometimes the sponsor might come and help with the pipe himself, what you call a sponsor's contribution. Right? So I don't think there's been much negotiation with regards to promote, etc., on the target end. But there is certainly negotiation about new terms with warrants and with less promote, etc., on the SPAC raising end. So starting the SPAC. And that's clear. The fact that not many SPACs are being listed is quite clear that the power is now in the investor's side, not in the sponsor's side. Okay. Now, on the target versus SPAC numbers and balance, both Ravi and I have said that there are thousands or tens of thousands of deals. I don't see much competition. The reason is because targets don't just want a SPAC to give them their vote. What they want is certainty of success, a successful de-SPAC. And even though there are 400 or 500, the certainty ranges from 0 chance of success with this SPAC and close to 100% chance if you de-SPAC with the other SPAC. So there is a flight towards going for the SPAC that gives you the highest chance of success. It's not the price you pay, it's not the size of your SPAC, because there might be 90% redemption and there might be no chance of raising a PIPE. On the other hand, if you go with this guy, he almost guarantees you that there is no redemption by participating in the PIPE himself and bringing in the PIPE even before. So I think companies know, and they are very focused on going with the SPAC that has the highest chance of success.
Yeah, it's interesting what you mentioned, because I remember reading this Wall Street Journal article. It was an investigative piece, and they quoted about Altimeter and Grab, and how the way that the deal was structured was that 90% of the promote actually went to Altimeter. I mean, to begin with, I think promote fees are not actually, you don't really disclose. Not much of it is transparent in the US SEC, according to US SEC regulations. But the fact that 90% of the promote went to Altimeter, but the kickback was that I think the lockup period for Altimeter was much longer than the industry standard as well. And I mean, I just don't know if this is something that is an industry average, would you say, or like how common is a deal of this type compared to some of the other deals that you've seen in this part of the world as well as in the US?
I don't have the details of that deal. Ravi, do you?
No, look, again, I don't know exact parameters, but let me just give 2 reflections. What is happening is overall, it is correct in US market, there is one shift has happened, because in the first flow, particularly last year, there was such a buoyancy for SPACs that almost everything was working. So this is like when wind is blowing, even turkey can fly. You didn't have to be equal. And that is why companies which are pre-revenue, but forget pre-revenue, even pre-product, were able to get into the market and get a greater result. But now I think that thing has got corrected. And I genuinely believe going forward, companies that are pre-product or pre-revenue or no clear path to profitability will have bigger challenge, because the market has questioned that, SEC has questioned that, and therefore that part is now settled, that the buoyancy has gone. However, for a good class company with a good growth, with a very clear business model, wanting to combine with a sponsor who can be very much value accretive in its journey going forward, that case is still very solid. And I think that will certainly work. There's only one constraint. There's a huge amount of PIPE capital is locked in. Unless that lock-in kind of dissipates, it will remain subdued, but eventually it'll come back. So the marriage of great quality sponsor and great quality asset, I generally believe in US market by Q1 will come into play once again. It will take another quarter. So this is my personal assumption, about a quarter or so for this whole PIPE lock jam to dissipate. That's where it is. But the case for to high quality asset and high quality sponsor remains very much intact.
Maybe we can just kind of segue to some developments that have been happening closer to home here in Singapore. I'm sure you guys know that the SGX released this new framework. I think this is probably 2 weeks now, coming to 1 to 2 weeks actually. Yeah, that they released the framework, and last week as well, Singapore announced that actually injecting some of their own capital into pre-IPO as well as SPAC opportunities here. Maybe just some top line reactions to the framework. What do you guys think about the framework? And do you think the SGX stands a chance of being able to draw in the kind of listings that they are looking to draw in here?
Oh, I am very, very pleased. Not just because of the rule changes or the rules that they have announced with respect to SPACs. And the changes were from their consult a few months ago, because anybody can copy their rules, right, and expect the same success. I'm more encouraged because of the coordinated fashion with which they have done it. It's the whole ecosystem in Singapore moving in lockstep. So they did it together with Temasek, announcing their regime, announcing with the MAS, with the grants to offset costs. And I think, I'm not sure if the GIC has announced, but there is some talk that the GIC might also be able to participate part of their monies in Singapore. Because, you know, the GIC has always been focused on investing outside of the country. So if you add that to the fact that we have always been an R&D hub of this part of the world, which makes deep tech very much more possible. If you add deep tech, you add SPACs, you add monies unleashed, you could get a phenomenal combination, and it gives me a lot of hope that we can finally make this happen and become a true deep tech hub for venture capital and for for this part of the world.
It looked like Finian has expressed. I am very proud of the way Singapore Inc. and all bodies in the ecosystem worked in making this happen and bringing it to this stage. Whether it is SGX, which really consulted deep and wide on this front, studied every aspect of the business globally, but also engaged with local players so that they get the context right. But also how MAS and everyone else, and including law firms, private banks, and everyone else contributed to that, has been super impressive. And I must say, what they've come out with a very considered opinion, and I think they've come to a right place. That's one part. The second part, I genuinely believe this gives Singapore a great chance to to really prop up things for the market here. So far, Singapore was famous for good quality REITs, some very good assets in healthcare, and then beyond that, it was considered a subdued market in terms of overall liquidity. But I think here comes a chance for us wherein we can create a third big segment, which can create a phenomenal, a fundamental wave for Singapore market. And I genuinely believe in it. I believe there are some great quality assets across the region. They believe in Singapore's governance, Singapore squeaky law and order, an overall belief the whole world has in Singapore system. There must be some reason why more than 50% of private equity deals by value have happened in Singapore and all of Southeast Asia, though we are a much smaller economy than our neighbors. Again, this is because of the governance quality and all those aspects. So I think those factors will come to bear in a very positive light for us in Singapore. I'm very positive. So we are already, we've declared that we are launching a SPAC in Singapore. We've already, we were moving ahead, and we're very, very positive about Singapore. In fact, even though we have been in the queue with a second and third SPAC in New York, I predict that our Singapore SPAC made de-SPAC faster than the New York second or third SPAC.
Oh yeah, you think so?
I genuinely believe so.
Okay.
Because
I would add
Yes.
that this needs to work because we don't have many more tricks up our sleeve other than being a deep tech, a tech hub for Asia.
Yeah, Finian, how about you? Do you plan to also launch your own SGX spec here?
Yes,
Yeah.
we've already said that we were keen to explore this. So
Okay.
even though we're launching our second and third spec in the US as well, we'll see which one comes first. I'm excited.
How large are you targeting for your Singapore spec and fundamentally on a strategy level? I mean, do you see yourselves targeting a very different type of company just because of the investor base here?
No, I think it's got to do more with the targets we have in mind.
Okay.
In Singapore, they are quite more open to sponsors like us, venture capitalists, talking to our targets already, and potentially sort of doing a spec with a target in mind, as long as the deal is not signed and sealed. So then in that case, we might raise a spec dependent on which company we are keen on. So that's good.
So size-wise, not confirmed yet.
Yeah, it depends on the company, right? So
Okay.
if we if we have company A, maybe 500 million. If it's company B, maybe 150 million. So it depends. We have lots of targets in mind, including our own portfolio, which has also been said to be, it's going to be well received in the Singapore regime. So that's great because we have quite a lot of Singapore companies that are specable.
Yeah, it was something I wanted to ask as well, because a lot of the fund managers that we've spoken to who are thinking about doing an SGX spec are very actively looking at their own portfolio and kind of assessing like, should I spec this? But it sounds like, I mean, the market seems a little bit split in terms of like, yes, you can do this, but do you really want to be seen as doing it? How much of that is actually a consideration for yourself?
I think what's more important is not whether you should or should not do it because it's not kosher. I think what's more important is the process with which you take to ensure it's done properly. So, for example, you want to make sure that you are not you're not conflicted. The decision on price is well taken. If you need an independent, you get an independent. If you need another co-sponsor just to ensure the independence, because otherwise there's nobody to decide if there is a conflict, right? So I think if the process is done well, with the sponsor ensuring that reputation is very well protected, then I think it will be very well received. What's more important is to be very transparent, to be upfront, declare everything, and make sure conflicts are dealt with very properly.
Next question for Ravi. I mean, liquidity tends to be an issue that people tend to bring up for SGX, and clearly, you have already gone out publicly to say that, Turmeric does have plans to launch an SGX spec. I mean, that liquidity tends to be a key risk factor. I mean, how are you looking to de-risk a particular scenario where your spec may go out into the market and not be able to receive the kind of liquidity that you're hoping to see? How did you kind of weigh and factor that bit in?
Look, I genuinely believe whether it is New York or it's Amsterdam or it's London or Singapore or even Hong Kong in future, finally it's about the quality of the asset. If you bring a great quality asset to the market, that asset will have demand. And if you try to bring a mediocre quality asset and try to put a lipstick on the pig, again, you can only fly so much, and beyond that, it will not. So I think really that's the biggest differentiating factor. We do believe that we have a good quality assets on our horizon that we think we should be able to engage, but we want to file first, get all the work done, and then start engaging. Similarly, even in the US, I can tell you, in case of Wheels Up, there was a reverse selection. We didn't, they selected us even though they had a choice of dozen other SPACs because they wanted our value add that we could bring. And again, it's already in a good play, and the company is performing much above what we projected to the market already for a few quarters. And I firmly believe we'll do so going forward. Same way in Asia, I think companies that are looking for our kind of value add, what we could bring to them. In this case, it's a reverse issue. Like for when we were going to New York Stock Exchange, we were looking for American companies or European companies that are doing well in their home market, but haven't figured out as yet how to win big in Asia. They might have a beachhead in Asia, but haven't won Asia in a big way. And we could facilitate that. In case of Singapore, we're doing the other way around. The companies that are doing well in Asia who haven't figured out how to go to West in a superlative manner, we could be helpful in that manner. And secondly, Asian companies in general have been very shy in brand building, storytelling, the narrative building part, and we could be more helpful in that aspect. And that is what our target is going to be. I believe dozens of targets that we could go out to the market with. I have some true poster boys in mind, but again, once we file, we'll start engaging and come to the market. But I'm very, I would say, I'm fairly gung-ho about Singapore today in this manner.
The SGX framework is also targeting, what we hope to be a captive pool of Southeast Asian companies, both tech and non-tech, in this part of the world. I mean, how much of a the risk scenario would you say would be that some of these companies might end up seeing exchanges like IDX or Thailand being more suitable exit destinations, just simply because we've seen, especially in Indonesia, IDX has just popped, like the market has just really been roaring, especially thanks to Bukalapak really, that maybe SGX might face some competition within its own backyard. I mean, forget about Hong Kong, like even Thailand and Indonesia could be competitors to them.
I think if a big country like Indonesia succeeds, it might have it might be able to keep its own companies, but it's hard for any of these countries to be a hub. So I think Singapore has the best chance. It's already a natural hub. So I don't think, just like Japan, it's hard for Japan to be a hub. They can be a hub for Japanese yen, but they can't be a hub for US, pound or US dollar versus euros or something like that. But anything to do with Japanese yen, yeah, they can keep that business onshore. So I think it will be the same for countries in this region. Indonesia is very big, so it might be able to keep its own domestic business, but it's hard for it to be a hub. In my view, Singapore should focus on something that it has a natural strength in, and that natural strength is deep tech. You see, it spent tens of billions over the last 30 years, and so it's reached a stage where no country in this region is even close. It's very hard for other people to catch up. And if we try to focus on the grabs and the e-commerce or the games or the internet or social network, that's a little bit less barrier to entry. Anybody can do that. And there will be more competition with the domestic markets. But if we focus on deep tech, there is a chance. Or we can focus on something else that we that has a big barrier to entry, like maybe brand building. So like how we did it with REITs, we just built a reputation in it, even though there is nothing inherent that gave us an advantage. We didn't invest a lot of money in REITs in this part of the world. It's not as if we have the most land to have properties on, but we became good at REITs because we built a reputation in it. So if we select some field in which we can build a reputation in, that's worthwhile attempting to see whether we can build a moat around us. But deep tech, there is a natural moat because our people are very highly educated in STEM, science, tech, engineering, and we also have invested a lot of money, and we have great universities. So we have a natural moat. So that fits with Vickers very much because we're a deep tech venture capitalist.
Yeah, I mean, it's interesting you brought up deep tech. Sorry, before we get to you, Ravi. Yeah, I just wanted to kind of dwell on this point of deep tech. I mean, because, you know, when you talk about deep tech, a number of our deep tech companies, whether they are in bio, I think BT just wrote an article recently about one of the deep tech companies here in Singapore now looking towards an IPO in the US. And when you look at most biotech companies, you know, when you talk about R&D or any kind of deep tech focus, you know, the biggest markets are still US and China. So SGX is kind of like in this really weird position where it needs to, it's sitting in the middle of Southeast Asia, so it needs that Southeast Asian hub, Southeast Asian market, but at the same time, it also needs to be global. So, I mean, what does that mean for some of our deep tech companies where, you know, the likes of these guys may not necessarily see Singapore as a suitable or global enough hub for its own ambitions and aspirations?
You know, when you say deep tech, you then mentioned US and China. Deep tech is not coming from China. All the companies that you know are very, very successful are in the internet space. TikTok, you know, Pinduoduo, or you know, Alibaba, or right, Baidu, or Tencent. You can't name me a biotech company from China that has suddenly, you know, invented. You know, tell me some tablets that you take that is made in China or developed or founded in China. No, right? It's Pfizer, it's Moderna, it's right. So it doesn't actually come from China at the moment. It should in the future, but currently it comes from the developed world where R&D has been spent. So it comes from Germany, it comes from Israel, it comes from London, UK, and predominantly the US. Where they list is less important, but where is it founded? It actually comes mainly from the developed countries. It could come from Singapore because we have a lot of R&D spend. It could come from Japan. It could come from China eventually. But where does it go after it comes? After it comes out and is developed, where does it go? It goes to the whole world. So once you develop a new discovery, the whole world uses it, right? So the market of the world is China, India, Japan. And the population of the world is half in Asia. Right? So isn't Asia a good place to potentially list a discovery when Asia is half the world? Okay, where would you want to list if you have to consider IP protection? You may not want to list in a country where IP is not respected so much. So Singapore IP protection is high. Singapore has the rule of law. Singapore has, you know, so it could be a potential Asian hub for deep tech because it has supply, because we have R&D spend, and it sits in the middle of half the world. And we speak Mandarin and English, and we have, you know, we cover India very well too. So it's actually a logical place, but we need a catalyst to get it going. And that catalyst, I think this recent endeavor, which is not just a SPAC endeavor, but it's a high growth company endeavor with a coordinated response from our pension fund, from Temasek, from MAS, hopefully works. Because I think this has a natural moat, as I said.
Okay,
last one
question.
Day,
yes.
China will be a serious supplier of deep tech discoveries.
Okay. Sorry to stop you there. Last question for Ravi before we wrap the session. So maybe just last comments. I think we stopped you just a while ago. Future prospects for SGX, specs in general, last comments.
Look, I think going back to the question you had earlier raised, it is the right observation and your point to see that the neighboring markets are also not sleeping. So for example, liquidity in Thailand has always been great. And then again, the multiples there have been fantastic. China liquidity has been great. Companies are trading at multiples of 30x to 40x to, in some cases, 60x of EBITDA. India, just till a few months ago, you could not go to the market if you were not profitable. And then came the big Zomato and thereafter many other companies coming out of market like Nykaa.com, etc., which are all pre-profit companies. And for the first time, a watermark has been reached wherein companies really which are pre-profit are coming to market and getting huge response, not little response. So with all the dynamic going on, does Singapore have the ability to stand tall amongst all this dynamic changes happening? And then Hong Kong is right on the heels as well. I genuinely believe that we do. And this is where I do agree with Finian on this part. We have a unique place in all of Asian panorama. Nobody believes, and again, with due respect to my own country, India, where I come from, and due respect to the big behemoth we have in China, etc., the law of the land, the squeaky clean, governance, nobody can stand taller than Singapore on that. And to that extent, wherever IP is a question mark, where respect for what you come out and nobody copying or running away with it, all that is concerned, I think Singapore will always be standing tall on that. So there is a scope for us to carve out a great niche and then shine on that front. And of course, deep tech is just one of the frontier. But also, I think it is truly a regional hub. It is the only hub that connects equally well with China and India, the two big markets, and similarly a fairly dominant player in Southeast Asia. As I mentioned, more than 50% of private equity deals of all Southeast Asia have happened in Singapore. There must be a reason for that. So I think there is a great chance. However, I must say that the first 3, 4, 5, or 10 SPACs are going to be the real test. And therefore, whole of the ecosystem has come into play. I believe the hedge funds are not as strong a player in the market here as they are in the US. Perhaps the family offices and private banks could compensate for a large part of that. Perhaps some of our own institutions could play a large part in compensating for the absence of large-scale pipe players, etc. If we get it going right, I think we have a great stead in front of us, and to build another great vertical like we built for REIT, like we built for healthcare. I genuinely believe that.
Hong Kong is also unveiling their SPAC framework as we speak. I mean, how much of a viable threat do you think Hong Kong is to SGX, or do you think it's just going to be a completely different thing altogether? Two different markets.
Look what Finian said earlier. In 2000 there were 1 billion people in America, and today there are still 1 billion people in America. There were 1 billion people in Europe, and there's still 1 billion, whereas we've gone from 2 to 4 billion. So again, by 2030, there'll be 5 billion people in Asia, whereas there'll still be 1 billion in Americas and Europe. So, and these people who have gone from 2 billion to 4 and now going to 5, they have gone from poor to lower middle class to middle class to upper middle class. And I think the future is here. There is opportunity of Asia big enough for China to shine, Hong Kong to shine, and Singapore to shine, and India to shine. I genuinely believe that. And in all of that, us too, in our own little microcosm to shine as well.
Fantastic.
My view is that, of course, Hong Kong is a big boy. They're huge compared to us. So everything they do, they could potentially be a threat. But this time they are trying to do something in a space that they don't have an inherent advantage. If you want to lure Chinese companies, obviously Hong Kong has an inherent advantage, right? Which we didn't. But if you want to move into deep tech, they don't have an inherent advantage. So we stand a very good chance, I think, of succeeding. That's my first point. The second point is Hong Kong is already big. They don't need the SPAC. So they're not as hungry as us. So we are very hungry and we need this to work. And we are not going to hold back. If it needs tweaking, if we need more money, more coordinated efforts, I believe that we have the will to do it. I'm not sure that Hong Kong does. It's just a small little business for them, right?
Yeah.
Because they have China at their back door.
Yeah. All right, fantastic. Thank you very much to both of you for speaking with us. We've come to the end of this session. Thank you for your time again, and I hope to see all of you again soon.
Thank you very much for having us.
It's a great honor.
Bye-bye. See you, Ravi.
Cheers, Finian. Bye.
Bye.